Hi, I'm Fook with Alphabet Group, and today we're going to talk about stock sale planning. And this is highly encouraged for those who have a lot of stocks and they want to sell the ones that will incur the least amount of taxes. So this is actually all part of our planning session. This is just more in-depth and very specific to stocks. And this relates a lot to my tech employees who have a lot of RSUs vesting at different dates, vesting at different prices. So it's actually good to know which lots they should sell. And a few examples that I get with my clients here is that sometimes they just need $100,000. They just want to know which lots to sell. Maybe they just want to sell just enough before they hit the next tax bracket. Maybe they just want to sell and not pay any taxes at all. And also a common one that I get is that maybe they want to sell various amounts. They just want to know the difference in taxes between each one, such as 100K versus 200K versus 300K. So for us to run the scenarios, we're going to need a few items to make sure that we run the calculation properly. The things we'll need would be number of shares available to sell, purchase price, purchase date, and how much you want to cash out. So once we review everything that you provided us, we'll let you know exactly which lots to sell and which ones you shouldn't sell. Sometimes we'll even recommend selling losses to help offset gains. And for the lots that you shouldn't sell, most likely it's because it's unnecessary to sell those losses, maybe because it's so close to being long-term capital gains, so we don't want you to touch those. And we could also provide more details where we provide the order of which you should sell. So let's say, for example, you wanted to cash $100,000 out at today's price of $220. So you provide us this schedule where it says, okay, I own these stocks. Here's the vesting price, here's the vesting date, the quantity, and the price. This is the total cost, total proceeds. So let's just say you want to take $100,000 out. So what we would do is we'll just say, hey, these green boxes, the ones that are boxed out, these are the ones you should sell. These right here, the X's, you should not touch those at all because they are so close to long-term capital gains. So let's not touch those. And then another example we could do is that, okay, you want to take 100K out, but let's just say you want the option to take an additional 40K out just in case you need it for something else. So I would say, okay, for the first 100K, just sell the green ones. And then for the next 40K, just sell the yellow box and so on. So when it comes to tax planning, it's about being proactive. We want to make sure that you're just not blindly selling stocks like the oldest ones first, because that usually has the most gains. So we want to make sure that we're utilizing everything and we're calculating all of your stock holdings as a whole. So sometimes we might want to sell some losses to help offset some gains. Sometimes we want to sell ones that might be recently vested because those will have very little gains. So it really depends on your whole situation on what stocks you're holding. With stock sale planning, we are very focused on the planning in itself to make sure that we are ready for any surprises and that we're just ready to know exactly what we should be doing to help you save on taxes. So that's stock sale planning. Make sure you give this video a like. It lets me know that I'm doing a great job. I'm looking to get 10 likes on this video.